Good morning, investors and traders. Today we are back with two particular assets which are rallying, which we've discussed earlier this week, and this one is a pure upgrade. In addition to that, we will be talking about how far can they really go. If you haven't subscribed to our channel, I highly recommend you to do so. Here is a brief risk warning and disclaimer in front of you. A bit about myself: I come with a wealth of 15 years of trading experience. During this time period, I worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst to EverTrade. Now, we will begin the conversation by looking at the BTC chart. Now, what I'm going to do, I'm going to clean up the chart, and meaning I'm going to delete the Bollinger Band, because previously we talked about these lines. This line over here, this line over here represents your Bollinger Band, just on a higher level. When the price crosses above these Bollinger Band, it means the price is oversold. We could see a retracement, which we did for a day. And then on the opposite side, when the price passes below this line, then that means the price can reverse its reaction, and then we can see we did see that. And then after that, the price stayed within that Bollinger Band. Now the Bollinger Band is no longer valid, so we're just going to kind of get rid of it. Now remember, previously we talked about Bitcoin prices crossing above this particular resistance level of 53. And then after that, we spoke about the Bitcoin price coming into this key area of resistance where it is now, and that is at 60,000, sort of a resistance level, which the price is really touching and kissing and challenging that level as of today. Now, of course, this is not the area which we mentioned that is the key focus among investors and traders. Why? Because the momentum is not about, my friend, about this area anymore. The momentum is really about this all-time high, which is right over here. And that all-time high is very much talking about that 65,000 price level approximately. Now, as you can see, the clear picture is that the price is coming into this area of resistance, and this is happening, by the way, on the back of the major optimism about SEC. Investors and traders believe that the SEC is very much going to approve the ETF, and that is very much pushing these particular moves in terms of the market, in terms of where we are going to go from here. And the likely chances are that the price momentum is going to continue from here onwards, and it is going to go from take the price from here to all the way to here. So if you haven't entered into this position, you could certainly enter that at this particular level, putting the stop loss just over here below the lows of today, over here, and then you can target that. Of course, this is not the high strength area. This is not the best risk to reward ratio, because the best risk to reward ratio was when we mentioned previously, and that was at a junction when the price. So what we are seeing in terms of that price level is really that the best opportunity came when the price was here. It was crossing around this particular price levels, the 50s, when it crossed again above the 50-day simple moving average. Or the opportunity when we presented was back over here when 50-day simple moving average crossed above the 100-day simple moving average, or when we talked about that if 50 is crossing above the 200-day simple moving average. Yet there is still plenty of opportunity, because now we are about to see the best bullish setup for Bitcoin, which is the 50 is trading higher right on the top, and the 100 is going to cross above the 200, and that means substantial moves in terms of Bitcoin price that could push the price towards that 75 or towards that 100,000 sort of a price level, because that would be an absolute perfect bullish sentiment or the bullish setup in terms of the price action. Now, very quickly about the Dow Jones Industrial Average. Earlier this week, we talked about the bearish pattern forming over here, the possibility of the price moving to the downside because the 50 was about to cross below the 100-day simple moving average. And then we talked about that stop loss placing right over around this particular price level. But now, at the same time, we did discuss that if the price breaks above the 50 or 100-day simple moving average, this downward trend would be very much over, and that is clear now into the market because the market has crossed above the 50 and the 100-day simple moving average. This crossover is not going to happen. The 50 is only going to kiss the 100-day simple moving average and going to remain above the 100-day simple moving average, which will be a confirmation itself that the price is going to begin its gigantic move. So now it's time to flip that trade, place the stop loss below the 100-day simple moving average, and let this trade continue. The current risk under the current circumstances would be, let me just erase that one and then let me draw that. So the current risk, if you take that particular trade as of now, is going to be where the price is trading at the moment and where the 50-day simple moving, 100-day simple moving average is trading. In terms of the reward, what we would be very much focused on from here onwards will be all the way to here, touching towards the all-time high, as long as the price stays above this one. However, if the price drops below these moving averages, then of course we will have no choice but to reverse that trade and then go short. So keep an eye on these ones, and I'll be back with more update in the near future.